Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to this morning's webinar. Well, with the day missing from late last week for Australia Day, the Australian dollar took a heavy tumble and printed a low of 80 cents or around 02 before staging a very sharp rebound and claiming the high of 81.20. Now, from the challenge to the upside, the technical implications from the RSI is still showing bearish divergence. Although I can't rule out a challenge to 81.55, I do expect though a rejection from there and look back towards 80.45, and with the base now holding at 79.90. Mixed views coming out of the US dollar on Friday. First of all, Treasury Secretary Stephen Mnuchin said that the US is open for business and welcomed a weaker US dollar. With the euro finishing slightly mixed at the end of last week, Donald Trump stepped in and clearly and outrightly contradicted the Treasury Stephen Mnuchin remarks by saying that he sees a stronger US dollar, and this sent the market in slight spasm, as you can see with the shooting star in the euro, and also with bearish divergence. Does question whether the market has hit a high around 124.95. To the start of this week, though, we may see a little bit of momentum as we do have the Fed this week and also non-farm payrolls. So that could put a bit of a roller coaster ride. But if you look from the RSI, there is divergence to the bear case. We are overheating from an ADX. And also, if you look at the MACD, is the fact it's still potentially coasting sideways and giving little away in terms of a bear case. But the signs are slowly creeping in to suggest that we could be seeing a potential turnaround. Well, the dollar yen stabbed towards 108.25 and recovered slightly, still not out of the danger zone yet. You can still see there is slight divergence coming through with an overheating of an ADX and also an oversold stochastic. Could eventually see the market turn away from 108.25 and look up towards 109.20 to 109.80.85. It is viewed that the dollar will eventually regain momentum. Now, as I mentioned this week, that we do have the non-farm payrolls. Now, the number is expected at 184k in January. Previous was 148, with the average earnings expecting to increase by 0.3 and the unemployment rate to remain at 4.1. As I mentioned, there is divergence, so we could see a rebound very, very soon in dollar yen. But it would seem that the sterling case is still persistent to challenge higher, even though we have lack of confidence and support from the technical outlook. From the rejection you can see here, does suggest that we could see the market look back towards 140.80 to 139.90 and reassess from there. Well, the gold did stab a high late last week of 1,365 before retreating. With the view still holding towards 75, we could see dips to be shallow, but you can see now the trend up, the uptrend comes in at 1,341 to 43. While maintaining above there, should still look towards the upside. One thing to note is the technical implications are slightly to the bear case. So dips may be shallow, but you can see here from the MACD, it is still supportive for a pullback. See how it plays in the next 12 to 24 hours. And if demand does come from either 47 to 41. And to round off with oil, as you can see, the market is challenging this $66 a barrel level. Overall, I see some divergence, and also I see a MACD that is failing to support the up case. Therefore, we could see a turnaround to the start of this week at $64.60 and reassess from there. So that wraps up for today. Thank you very much for joining me, and I hope you have a great start to the new week.